Hey traders, welcome back to uGenesys. In today's video, we're diving into the fascinating world of ascending channels, also known as rising channels or channel ups. These chart patterns offer valuable insights into price movements. So let's get started. An ascending channel is formed by two upward trend lines representing resistance and support levels. The lower line, known as the trend line, is drawn along the lows, while the upper line, called the channel line, runs parallel to the trend line, connecting the highs. This bullish chart pattern showcases a series of higher lows and higher highs. When prices move within the channel, they are expected to bounce off both the upper and lower boundaries. The more these reversals occur, the more reliable the pattern becomes. While an ascending channel may resemble the rectangle pattern, the key difference lies in its upward slope. It is essentially the opposite of a descending channel. Traders can seize opportunities within the channel by looking for long positions around the bottom trend line. Aggressive traders may even trade long and short at both trend lines, anticipating a bounce or pullback. Another approach is to wait for a breakout above or below either trend line. A breakout above the upper trend line generates a strong buy signal, indicating a potential acceleration of the existing upward trend. On the other hand, a breakout below the lower trend line generates a strong sell signal, suggesting a possible trend reversal. Breaking through the trend line might signify a significant change in trend. However, it's important to remember that like any pattern, ascending channels can experience false or premature breakouts. Prices may retreat back into the channel, so caution is advised. Nevertheless, ascending channels provide valuable insights into overall trend changes. As long as prices remain within the ascending channel, we can expect the upward trend to continue. Additionally, a failure to reach the upper line often signals trend exhaustion, serving as an early warning for a potential reversal. Breaking the trend line is more likely to occur in such cases. Ascending channels often appear within an overall downtrend, and they can either indicate a continuation of the trend or a reversal. The direction of the breakout will determine whether it's a continuation or a reversal, and that concludes our exploration of ascending channels. We hope this information enhances your Forex trading strategies. Remember to like this video and subscribe to our channel for more valuable insights. Happy trading!